company has seen very strong disbursement growth. Sanctions too have risen in Q2, but the AUM growth continues to remain quite sluggish. The company has guided for a loan book of 13,000 crores by the end of the year. K. Swaminathan, the MD and CEO of Repco Home Finance, now joins us on the show now. Good morning, sir. It's a pleasure having you here with us. This is Rima here. That's the first question, right? Despite a very strong disbursement growth, your disbursements were up 16% on a quarter-on-quarter basis. Yet your AUM growth was only 1.7% if I look at it on a sequential basis. Why is that? And what is the guidance on AUM? Will it continue to remain challenged?
Good morning, madam. Thanks, Rima, for having us on the show. Yeah, the one is for the last 2 or 3 years, there were some headwinds as far as this company's growth was concerned. Now we have brought back the headwinds, we have brought back the disbursements. Disbursements are at a very high level in the current year. This year, we need to have more stability. That's our plan of action. So as far as AUM is concerned, I would like to tell you, see, the company is 20-year-old, so there is a normal repayment itself is around 50 to 60 crores. And there are some prepayments and all that. One thing that company was facing is the BTs. Because of our interest concessions, some of the bigger players used to take over from us. That is getting addressed. See, our interest rates now are in sync or more or less in line with the risk that we are facing. So hopefully in the coming months and coming quarters, these BTs will come down and our AUM growth will be in tandem to our disbursements. That is our expectation.
Okay, hi, good morning, Mr. Swaminathan. Give us a couple of numbers then. I think your repayment rate is around 17 to 18%, if I got that number right in your past con call. Give us a sense about, what could be the disbursements you're looking at for the second half of the year. And we'll also need to track this repayment number. What's the scheduled repayment that we have for the second half of this year?
Okay. See, as far as disbursements are concerned, we are expecting a disbursement of around 1,600 crores. This is the normal organic disbursement that we are expecting in the second half. Repayments are likely to be normal. Repayments are around 500 crores per quarter. This we are trying to shrink as much as possible, especially these BTs. Hopefully, with our efforts in containing the BTs, we expect our loan book growth to be near about 13,000 crores. So around 1,600 crores of organic disbursements and a net of some 1,100 crores or 800 to 900 crores of repayments. I think we will still be near about in the sharing distance of 13,000 crores.
Okay.
That is the expectation for the 31st March.
Okay, all right. So you're telling me that your loan book at the end of the year will be around 13,000 crores, right?
Nearby 30,000 crores.
Okay.
If not exactly, somewhere near.
Okay, all right. On the NPA front, the holiday for the restructured book, well, that ended in the first quarter. How are things shaping up out there? And could you give us a sense about your, NPAs? What will it look like, say, by the end of this year?
See, NPAs, the worst I should say, is over in the second quarter because of a restructured book of around 700 crores hit us the second quarter. Thankfully, because of the efforts taken by the entire field, we were able to contain, even though there were certain slippages from the restructured book. Because of the recoveries in non-restructured books, we were able to contain NPAs to a large extent. Going forward, since the restructured book is behind us, so we will be able to contain the normal NPAs, and we are hopeful that we will be back to around 5% in the GNPA level. And the net NPA level should be below 3% by the 1st March. That is the expectation. And we are quite confident that we will be able to reach it.
Right. Mr. Swaminathan, hi, good morning. Just to stay on asset quality, will most of your efforts to stabilize asset quality be via recoveries, or will you look to sell loans to ARCs, etc. as well?
Thanks, Prashant. We are having all the options before us. So far, we have not done any ARC sale. That is one thing. But because of the efforts taken by our field itself, we are seeing sizable momentum in recovery efforts. That is why, despite a slippage of around 160 crores from our restructured book, we were able to contain the net increase in the NPAs to a mere 23 crores in the second quarter. So definitely, I think if our efforts are going to succeed, which we are confident, I think there may not be any necessity to go for any sale to ARCs. But that option is still open with us.
The fear, though, Mr. Swaminathan, is that there will be further slippages from the restructured book. You're saying it's highly unlikely?
It's highly unlikely because the worst is over as far as restructured book is concerned. Because the restructured portfolio, they have already started paying. Already some 4 or 5 installments they have already paid. Even though there may be some overdues in the restructured books, but still slippages to NPS are like unlikely. So we are confident that this restructured book, slippages out of restructured book will be limited to the minimum.
So what about margins? Your net interest margins improved on a quarter-on-quarter basis. It currently stands at 4.8%, but it's still lower than the 5% plus that you enjoyed last year. Do you see margins improving to, say, 5% by the end of this fiscal year?
Yeah, we are quite confident, madam. One reason is most of our books are getting repriced in the third quarter because around 40 to 50% of our book is getting repriced. This is one. And during the second quarter, we have increased our MLR, that is our minimum lending rate. Because of these effects, definitely in the third as well as in the fourth quarter, our margins are likely to improve. We have passed on more or less whatever is the increase in the cost of our funds to the customers. So the worst is over as far as NPS and as far as the other parameters are concerned.
Okay, all right. Mr. Swaminathan, your OPEX has moved up. Is it because you're trying to move more towards a non-South market? If you could give us a targeted share. I recall that most of you are South-based. Do you have a target in terms of how you want this mix to move going ahead? And what is the targeted OPEX that you're looking at if you have a ratio?
See, as far as OPEX is concerned, it will be more or less around this 20-22% level. One reason is because we have recruited quite a few number of people we have recruited in the second quarter. Well, this recruitment may continue because of our expansion plans. We plan to open around 20-25 branches in the next year, subject to our approval by the board. And mostly our expansions are like happen in the Western Territory. This one of the reason is on the HR front. Second one is we have also gone for a digitalization. A new platform is on the thing. So there will be an increase in the cost because of such things. Due to these reasons, the cost to income ratio will be at an elevated level, but we will be able to bear because of the expansion, because of the increase in the AUM.
Mr. Swaminathan, last question on the split between self-employed people. You used to be heavily dependent on that segment, right? What is the proportion of the book now?
Not necessarily. See, it is more or less equal. 50-50 is between the self-employed and the salaried segment. And nowadays, our interest rates are very competitive. It is in competitive with some of the best in the industry. So we are also seeing some traction from the salaried segment to our portfolio. So going forward, yes, this ratio will be more or less around 50-50 or maybe 55-55 in favor of salaried segment.
All right.
So the portfolio will be more and more better in the coming quarters.
All right, we'll leave it at that. Thank you very much for joining in. That is Repco Home Finance for you, guiding for a loan book to hit 13,000 crore by the end of Q4 FY23 and margins too to improve from current levels. And they're quite confident that the worst of the asset